Okay. So last class we have started the performer of partners current account and capital account. Here we have seen two types of partners capital account we have in partnership firm. In two conditions we are actually using that partners capital account method. One is that when that the firm thinking about the capital how much contributed, that not supposed to change, that time we are using fixed capital method. But when the firms not thinking about that how much capital I have we have contributed, that every year when the profit coming from the firm, or that any one of the earning in the form of salary or in the form of partners capital account and all, anything that interest on capital and all, if it is coming and if it is adding to the partners capital can be increased. Last class we have seen. So that's why it is comes under, or it is known as the fluctuating capital method. So two types of capital method. One is that fixed capital method, there the capital never be changed, that the capital how much contributed that exactly same will be. And fluctuating capital method, uh, uh, the capital will be changed. So in this fluctuating capital method only, we are making one account, that is partners current account, capital account, sorry, that is partners capital account. In this partners capital account we are going to see, right, the performer when is given that we're going to see that. I think this performer, let me check above, this performer is given. Yes, it is given, right, this performer, right. So here that performer of capital account under fluctuating method, if you seeing that under fluctuating method, in the under fluctuating method, that means only one account we are framing, that is partners capital account. Now see that if partners capital account, first point is that partners capital always it is a liability. Again, capital always it is a liability, right? If the capital is a liability, so liability point of view, if the capital is a liability point of view, liability always be credit. Liability always be credit. For this purpose, I'm going to board that journal entries rule. What rule we have learned, that we are going to see little more. Okay. Yes. Now see that the journal entries rule, it was like that: assets, liabilities, expenses, income. So now assets and liabilities, it was debit, journal entries rule. Liabilities and income, it was credit. Money received anywhere, the money receiving, that should be debit. Money paying, that should be credit. See here, that is the rule of journal entries rule. Now if you thinking about that money received, money paid, say example, one journal entries we are going to see, say purchase of machinery. So purchase of machinery,
Machinery
okay.
account.
So what you are writing here, the machinery account debit to
Bank.
what?
To bank or cash?
To bank account or cash account. Now see that as per the rule, machinery is a asset. So as per the assets, we have assets, that means of what? It is debit. So assets increases, it is debit. Now cash goes out. Have you seen that? Money paid. For that, money paid. So money paid, just to see that money paid, that will be credit. So six things we having here: assets, expenses, that always be debit; liabilities, income, that always be credit. Apart from this, money if you receive, that will be debit; money you paying, that will be credit. So as per this rule we will go. Now machinery account debit to cash account. Now you think about that, one capital you are introduced, right? So first entry, every journal entries we have seen, capital introduced by cash, correct? Like that the question we have seen lots of time. So now capital introduced by cash, what that entry you are writing normally? cash account debit to capital account. Correct or not?
Yes, sir.
Now you think why this cash account debit to capital account is coming like that? Because of normally you are thinking, sir, capital introduced by cash, that means cash I am paying. You are thinking that capital introduced by cash, that means the owner paying cash. So why that cash we are writing debit? Because we have seen money received and money paid. Money paid always be credit and money received always be debit. But here money not received. But even why we are writing here in debit?
Debit.
Remember that there always will be company is different, members are different. Here, even though members paying that money, concentrate, members paying that money, but that money we are not observing or we are not assuming in the form of member. We are always consider about the company. So here company receiving money or firm receiving money. So when the firm receiving money, that's why the firm is debit. So cash account debit, cash money received. To capital account. To capital account, that means of what? This capital is credit. Capital, it is nothing but a liability. Now see that the liability, where I have written here. Liability always L. L I have written, no?
Yes.
Liability always
Yes.
credit.
Credit.
Correct or not? So now
Yes,
what I
sir.
have written here? Cash account debit, that means money received to capital account. Capital account is in credit. Correct.
Credit.
Now come to that next situation. Now I am going to see again to the yes. Now see, capital was credit as, that's why always you remember that those the things credit, if you going to make that account always be brought down that side. So that capital was credit, we have seen. Now I am going to make that capital account. So if I am going to make the capital account, balance brought down always be in capital
Credit.
credit side. Now the question is, sir, that balance brought down if that cash balance having in the company or in the firm, that is total amount the company having. Sometime what happened, the partner supposed to give that amount not paid yet, that time balance brought down should be in debit side. But we are not seeing these things. That things we will see when the question is coming. See that it's given in case of debit opening of balance. So the partners even not having capital, the partners not actually given the capital to the company or to the firm, already having a liability to pay some capital to the firm, that time the balance brought down should come in debit side. Otherwise, every time the capital balance if you have, always capital balance will go to the credit side only. So first point over, balance brought down in partners capital account, always credit side, always credit side, always credit side. That's it. Debit side only exceptional cases it will come. Right. Now, if any additional capital introduced, that is also comes to the credit side only. Because of that entry is what? If you're writing the journal entry, what you are writing again? Cash account debit to capital account.
Two
Correct or not?
capital.
Now think about the cash account debit to capital account. And I am making what? Capital account only. If I am making capital account, so capital account is in credit side. The amount will come in credit side. But what I should write as per the ledger? I can write by cash or bank only. This is the ledger only. Account always
Yes, sir.
ledger only. As per the journal entries, what the ledger you have that you should put. That's it. Clear? So by cash or bank, that is the ledger. That's it. Clear? Yes.
Yes,
Now
sir.
this is the partner's capital account. Anything the partner earning, always remember again, anything the partner's earning, two things first, that is part balance brought down, second is by cash if any additional capital introduced, right? This 2 point over. Apart from these, anything the partners earning, that all will come to my credit side only. That can be in the form of interest on capital, that can be in the form of commission to the partners, that can be in the form of partner salary, that can be in the form of in the profit and loss appropriation account any profit if you have, right? So that is comes under here, right? Now opposite, if you have any drawings brought down, how, in which case, exceptional case, that already we have seen. Now in any manner, that additional capital if you introduced, I have written in credit side. But the thing is, if you withdrawn your capital, definitely opposite will be. So if you additional capital you put that, that is in credit side. So if you withdraw your capital, that is known as the drawings for personal use. So drawings will come our opposite side, that is two drawings, right? As well as interest on drawings also, it is the expenses for the partners, as well as if any other losses of the partners, that also comes to our debit side only. So in debit side, for the remembering purpose, two things main will come, that is drawings and interest on drawings. If any losses is there, that time also it will come in the debit side. I hope clear.
Yes, sir.
Okay, next point, that is performer partners capital account under fixed capital method. So under fixed capital method, there will be two account we are maintaining, correct? So two account we are maintaining. This before what we have seen, fluctuating capital method. Now fixed capital method, two account we are maintaining. One account is always partners capital account. There will be no changes in capital. And one more is that partners current account. So now in partners capital account, only capital things only we will write. What are the things we'll write? Balance brought down, that is capital. How much capital you have that? By cash if additional capital you introduce. And opposite side what will come? To cash if you withdrawal. Remember that. If you withdraw any capital permanently. Got the point?
Yes.
Drawings, it is not a permanently. So drawings always goes to the current account only, right? But withdrawal for permanently, that time what the entry should be you are writing normally when you are introducing capital, what you are writing? Cash account debit to capital account, like that you are writing. Now permanently withdrawal, what you should write? Opposite. Permanently withdrawal, capital account debit to opposite, cash account or bank account. Got the point? So now I am converting that these things into journal entry. Simple. So capital account debit to cash account or bank account. Clear? Always. Two, always two. So two cash account or bank account. So this amount will come that side. Tally it. What the balance amount we are having here? This is the balance company or the firm having. Right? It is not negative balance, it is a positive balance only the firm having. Now we are going to see the current account. If the current account, the word is coming now, simple that what are the other things we have seen in partners capital account in case of fluctuation method, that other things what we have seen there, that all things will come here. What are the things will come? We'll see that this is the brought down is what we'll see. What are the things? Interest, salary, commission, or any other profit. That's it.
Yes.
See that by cash, that amount we have not seen here, additional one. Because of that goes to our partner's capital. Right?
Partners capital.
Yes.
Yes.
Now see that in that side, drawings, interest on drawings, or any other losses. Correct? That three things will come here. Now this brought down is what? This brought down is what? This brought down, it is not a partner's capital account brought down. This brought down is sometime the question even given current account brought down. Okay, current account balance. So this current account balance will be balance brought down. Obviously, current account balance, positive balance they are having, they, that will come to the credit side. If it is negative balance, if it is having, that will goes to the debit side. That things already we have seen before, positive and negative balance. Clear all the format?
Yes, sir.
Yes. Next, one more format we are going to see, that is profit and loss appropriation account. Before that, what is profit and loss appropriation account? After that, we will go profit and loss appropriation account. After the journal entries also we will see. I told in 11th class also to you, if you learn properly the journal entries, it is very easy for you to make that ledger any other accounts. If that any other accounts, if you can make from that accounts, you can convert easily also journal entries form. So that only we are going to learn here also. Okay, ledger to journal, journal to ledger, nothing more than that. Every account like that only, ledger to journal, journal to ledger. Okay, so first I am going to board to show what is appropriation and how to deal with that. Yes, so first thing first, what is appropriation? As per partnership company or partnership firm, appropriation is nothing but distribution. Okay, remember that appropriation is nothing but distribution. The distribution of what? Distribution of profit. Okay, distribution of profit. And one more point is there that we are going to see. So that appropriation is nothing but the distribution. Distribution of what? Distribution of profit. Among whom? Among partners. Okay, partners. Okay, now if distribution of profit among partners, what are the rules, what are the things we are going to follow? Am I, am I audible to you?
Yes, sir.
Okay, before one already went out somewhere. Okay,
Appropriation
so
is
first thing you understood, right? So what is
yes, sir.
appropriation? Why we are doing appropriation and
It is
all, right? Okay, now partners are A and B. Two partners are there. Okay, two partners are there. Now in these two partners, this year the profit they earn 5 lakh rupees. Now the partners A and partners B, that 5 lakh rupees they are exactly ready to distribute among them. That means exactly ready to appropriate among them. But as per the deed, we have lots of agreements. So in this agreement, many things are there that should be followed first. After that, that at the end, if any profit left, that can distribute among the partners. So the things is that, so many are that expenses firm actually having. For that expenses also the firm will bear, and after that, that we are making that appropriation account to distribute the profit among the partners. Remember that appropriation account, it is relationship between the partners and the firm. Always remember, appropriation account, it is a relationship between the partners and the firm. Now again, appropriation account is nothing but it is a ledger account. So I am making the appropriation account in the form of ledger. I made like that. Yes, yes. Appropriation account I made. This is the debit. This is the credit. Now think about what actually we are going to appropriate. We are going to appropriate this profit. So that's why in appropriation account first I have taken in credit side because it is a income, right? It is a income. What we have seen: assets, liabilities, expenses, income. So income
Income.
are credit.
Credit.
So it is income. So I am writing in income side, credit side by profit and loss account I am writing, and I'm writing in bracket net profit. Okay, this is net profit. If it is any loss, that time will be coming in this side. To profit and loss account, I am writing in bracket net loss. Correct. Now see,
Yes.
now see profit and loss account, and this is the net profit. How much amount actually? That 5 lakh rupees we are having here. Now, by using of 5 lakh rupees, what are the things we supposed to pay first? First one is that I am thinking about the expenses side. Hmm? So what are the thing
Yes.
expenses actually from the firm going to give, or can say that going to pay. But remember first what I told, that appropriation account we are making for that, showing the relationship between the firm and partners, so that any one of the amount the partners going to receive, that amount going to pay the by the firm, that I am going to write in debit side. So indirectly debit side is the expenses. Expenses for whom? Expenses for firm. So first I am writing 2 interest on capital.
Yes, sir.
So interest on capital, it is the expenses for a partnership firm, but that partnership firm paying to that things to the partners only, that is different. But first partnership firm thinking about that these are my main expenses, that main expenses I should do first. So that interest on capital, the partnership firm paying to the partners. Okay, apart from this, to salary, again to salary to whom? To partners. I told about anything you are paying to the partners, then only it will come to the appropriation account. If you are paying to the outsiders, for that purpose we are making profit and loss account, not the profit and loss appropriation account. Next, to commission, right? To bonus. Now you can get that all are the things, all are the things that I am writing in debit side in profit and loss appropriation account, that goes to firm account only, right? But firm telling, dear, the payment I am doing to you, that's fine, but as I am doing lots of work by using of that our environment, and knowingly unknowingly I am polluting them, so for that purpose I will do some charity also. So to charity. So any one of the charity out of your profit, if you're going to pay, that also you should subtract. So you are writing in debit side. Is that okay? Understood up to
Yes.
this? Okay. Apart from this, now firm telling that, okay, these all are the expenses what I am going to pay or going to do, that already I have written that. But what if in future if any contingencies arises, if I've got now 5 lakh rupees as a profit, it not means that the every year I am going to get the 5 lakh rupees profit. Next year it can be loss also. So at that time what I should do? So that's why
Yes.
I am doing some reserve also out of profit. So that's why to reserve.
General reserve, sir.
No, you write here there's only reserve, because of that general reserve, it is when you are transferring to the balance sheet, that time it be known as general reserve. Now out of your profit you have taken some of the money out, and it is known as reserve. That's it, right? So in debit side what are the things we have? to profit and loss account. If any loss you have, net loss, then only the brought down will come in that side. That means expenses or losses, this side will come. Income, that 5 lakh rupees income you have, that you have written in credit side. And after that, all are that expenses the firm going to do to the to the partners. Say that to interest on capital, to salary to partners, to commission to partners, to bonus, to charity. So any one of the expenses you are going to do for the social welfare. Apart from this, if you reserve any money from your profit, that also you are subtracting from your income. So that's why you are writing in this debit side. Now all are that companies or firms, not only expenses, firm having some income also. What is the income? By interest on drawings. So that when the firms earning in the form of interest on drawings and paying by whom? Paying by partners, right? That I am writing in credit side by interest on drawings. And that by interest on drawings amount, how much amount is there, that you are writing here, right? Now if you have written here, we are doing tally. Now when you doing tally, say example I have written 5 lakh rupees and here all the total coming 4 lakh rupees. Now after doing this, 1 lakh rupees pending, this 1 lakh rupees goes to A and B in the form of ratio, and that's why we are having here two appropriation profit transfer to whose? A's capital account and
Yeah.
B's
Yes,
capital account.
capital.
Okay, so these are
Yes.
the ingredients actually we have inside the profit and loss appropriation account. I hope clear this part, right?
Yes.
Now we are going to see our book. Now see that partners capital, right, in the form of salary. All partners capital only have written, but remember that this again, this all goes to partners capital. That's why it's written partners capital. Okay, but the things is that what, to salary amount is, right, salary. Oh, not able to write, what happened? Yes, after that see to commission, to interest on capital, to general reserve, or can say the to charity. That charity also not shown, you can write here only reserve, right? These
Yes.
things,
Yes.
yeah. And in that side what, by net profit, as well by drawings, interest on drawings, correct, interest
Yes.
on drawings, all are partners capital only. Because of this, all account actually goes to partners capital, right? We have seen in partners capital, if you remember that partners capital first, credit side, what are the things you have after balance brought down? You have no salary,
Credit
partners
side.
commission, partners bonus,
Yeah.
remember, no?
Yeah. Yeah.
So that's why here written all partners capital, because of this will go to partners capital, that's why, nothing more than that. Okay, I hope understood up to this.
Yes, sir.
Now we are going to see that the journal entry for that. Okay, so journal entry, if you seeing this side, this is already brought down one, so this one is, I'm not asking journal entries. Can you tell me this journal entries will be what? This is the appropriation account, correct?
Yeah.
If this is the appropriation account and this is the partners interest on drawings, okay, so what is the journal entries for that, this one, any idea?
Interest on drawing.
Interest on drawings journal entries, what should be?
Interest on drawing account debtor to profit and loss appropriation.
That's it. Okay, so this is the things, interest on drawings account debit to profit and loss appropriation account. See here, this entry is here, interest on drawings account debit to profit and loss appropriation account. Before that, what are the things will come? Say that for charging interest on drawings, that is written, but this is Partners capital account debit to interest on debit drawings account, that again will go to there. Okay, partners capital
Yes.
account. That's why it is written. Don't worry, just you listen carefully. Second entry. So here the
Sir,
interest on drawings account debit to profit and loss appropriation account. Yeah. So now we are going to see our account converted into form of journal entry. So the journal entry, if you could find out that there are everywhere 2 to 1 transactions, we are having 2 journal entries. How to do that? Let's see that. Right. So if you checking here that first,
yes.
yes, here, if you see here in that side, say partners capital account, partners capital account, partners capital account, everywhere partners capital account written. But the things is, if you checking this is the salary. So I can convert in the form of, say, profit and loss appropriation account debit to, this is nothing but what? Profit and loss appropriation account. It is, yeah, profit and loss appropriation account. So profit and loss appropriation account debit to, I am not able to write. Why not? I don't know. Okay, profit and loss appropriation account debit to that any one of the things. So partners capital account, if I am taking this partners capital account, indirectly what? That profit and loss appropriation account debit to salary account. Clear the point? Yes. Next is that what? Profit and loss appropriation account debit to commission account. Profit and loss appropriation account debit to interest on capital account. Profit and
Yes.
loss appropriation account debit to general reserve. That also I can make. And in this side, what should be? Partners capital current account debit to profit and loss appropriation. Indirectly what? Interest on drawings account debit to profit and loss account, profit and loss appropriation account. Correct?
Yes.
So now come to that. What are the things we are seeing here that actually we have seen here, that all are the things above how they have written that. Okay.
Okay.
See here, this one is that net entry. Net entry indirectly what? That first one is that partners capital or current account debit to profit and loss appropriation account. For which one this? This one is the net profit one. Right? So net profit one. So partners capital account or current account debit to profit and loss appropriation account. Next one is that, say here, this all are profit and loss appropriation account debit to reserve account. You have seen that side. Now share of profit, again profit and loss appropriation account debit to partners capital account. These things don't take stress. This point I will tell again. This point. Okay. Indirectly these all are done, or directly they have written profit and loss account. Profit and loss appropriation account debit to partners capital account. Actually these all are the things comes drawings, or else you can say interest on drawings, interest on capital, this all other parts will become here, right? So this journal entries we'll see when we are doing this, that time we will see that things. Okay, I hope up to this clear. What else? Just a second, some setting came by. Oh, this one. Okay, now any question, if it is given there, that will do that. Yes, one question has given there. Let's see that. Right, on 1st April 2013, little concentration needed. One question we are going to do, that Bridge and
Yes.
Nandan entered into a partnership to construct toilet in government girls school, in the remote area Uttarakhand. Okay, they contribute capital. This point is important. They contribute capital rupees 10 lakh and 15 lakh respectively. Okay, so capital is 10 lakh and 15 lakh. Their profit sharing ratio given 2:3. And the interest allowed for the provider of the capital was, as per the partnership, is 12%. Okay, interest on capital also allowed for 12% per annum. During the year ended 31st 3/2024, the firm earned a profit rupees 2 lakh. Okay, firm earned a profit rupees 2 lakh. Now profit and loss appropriation account we are making as per the 31st March 2014. Now see that in the books of the Bridge and Nandan, Profit and loss for the year ended 31st March 2014.
Okay.
First thing first. First thing what we need here. First thing we need that profit. How much profit earned?
2
So if
lakh.
you could find out that how much profit earned,
2 lakh.
2 lakh rupees. So I am writing in credit side by net profit brought down 2 lakh rupees. Fine, as per the format. Is it okay as per the format?
Yes, sir.
Okay. Next one is before distributing the profit, what the things we are going to see, going to distribute. First,
In,
going to give that.
interest of capital.
Yes, interest on capital is given how much as per the deed? 12%. Have you seen?
12. Yes, sir.
So now 12% of 10 lakh, 12% of 15 lakh. But again, when that contribution has done, that also you should need to know. Okay. Contribution when done? 1st April 2013. So full year from there to 31st March 2014. So full year, right? So now
Yes.
I am calculating the interest on capital. Now, if you're going to find out the interest on capital for 10 lakh rupees, 12%, it will come 1 lakh 20,000. Have you seen that? Check once how to do that. See here that interest on capital here. Interest on capital, if you find out, calculate it, that will be 1 lakh
Yeah.
20,000. Shall I go to the board?
Yes, sir.
Yes. See here, interest on capital. I am making here interest on capital. Now you think about that interest on capital. Capital, how much provided? 10 lakh rupees. And this 10 lakh rupees,
10 lakh and
12%.
15 lakh.
12% if you're doing that, 12 by 100, 0000 cut, here down nothing means 1. 12 into 10,000. If you do that, that will be 1 lakh 20,000. So one interest on capital is 1 lakh 20,000. Second was 15 lakh. Correct. Full year. So 15 lakh into 12 by, again 12 by 100.
12 by 100.
Now take again. That will be 12 into 15. Do that. How much will be there? Check once. 15, 12, 5 and 12 we are doing. Okay.
Yes, sir.
180. So that
Yes, sir.
1 lakh 80,000. Okay. So 1 lakh 80,000 and 1 lakh 12,000. But the profit, how much I have earned total? 2 lakh rupees. If you're going to give the
2 lakh
interest,
itself.
interest even how much is coming total? 1 lakh 20,000 plus 1 lakh
3 lakh.
80,000. So total
3 lakh.
interest only coming that 3 lakh rupees. But the point.
3 lakh.
But I suppose I can give how much? I can give only 2 lakh rupees
2
because
lakh.
profit part only 2 lakh. If it is loss there, definitely remember that no interest on capital. If any loss, no interest on capital,
sir.
no salary, no commission, no bonus, no any other benefit to the partners. Got it?
Sir.
So here is not loss, but that much of sufficient capital we are not having to pay off that full money.
Yeah. Yes, sir.
That much of sufficient profit we are not having to pay off that full 3 lakh. So at that time, what we should do? Let's see that things now. Okay.
Mm.
Yes. That things we are going to do here. If you check here, see here, interest on here. Okay. Interest on capital for Nandan, that is 1 lakh 80, and interest on capital for Bridge 1 lakh 20. right? So now total
Yes.
appropriation, how should do that? This appropriation will be done like that. Yes. How much total interest on capital coming? That is 3 lakh. So 2 lakh, 1 lakh 20,000, that is out of 3 lakh. I am writing like that. Out of always divided by situation. So 2 lakh 20,000 divided by 3 lakh. How much for 2 lakh? Always how much for that should be multiple. So 1 lakh 20,000 divided by 3 lakh into 2 lakh. There will be the calculation. So that here 5 zeros and here 5 zeros you can cut. So divide by 3, how much is coming? Check once. That will be 40,000 into 2. So that 80,000 rupees we are going to pay first person. Second person, how much we are going to pay? Again, second person amount was 1 lakh 80,000 divided by 3 lakh. That means 1 lakh 80,000 out of 3 lakh into 2 lakh. Right?
Yes.
Again, 5 zeros cut. And here should be 60. So now 60,000 into 2, 1 lakh 20,000. So Nandan getting 1 lakh 20,000 profit part and the other person getting 80,000. So this is that one of the way when that profit is not sufficient to pay off even the interest on capital or any other benefit also. That time we should go like manner. So now we are going to see how I have done this. See here that 80,000 for one. Okay. 80,000 for one, for another 1 lakh 20,000. I hope clear.
Yes, sir.
Next, one more topic has given here, that interest on capital, that we are going to see. But before that, one question you should do. That question I am going to give you. Okay. That I am changing the question here. The question is, here is 5 lakh rupees. Okay.
Yes, sir. Okay. One second.
At the place of profit 2 lakh, that you should take 5 lakh rupees. At the place
I'll do
of
it.
2 lakh, the profit you should take 5 lakh.
Yeah.
Right?
Yeah.
Remaining all other things same. Do it.
Okay, sir. So I got interest on drawing as 1 lakh 20, 1 lakh 80. So, so,
Yes, am I audible?
yes, sir. I'm done.
Done?
Yes, sir.
Tell, answer. First, here how much you have written by net profit brought down?
So by net profit brought down, I wrote 5 lakh.
5 lakh, okay. Interest on capital, how much you
Uh,
have given?
B capital account 1,20,000. N
Yes,
capital account 1 lakh. N capital account 1,80,000.
right,
Total 3 lakh.
right,
Total 3 lakh.
right.
To balance carried down, its B is 80,000.
Okay.
N is 1,20,000. Total 2 lakh. Total on debit side is 5 lakh.
Uh, in which ratio you have given this? Profit.
2 is to 3. 2 is to 3.
That is not balance carried down. This is known as the appropriation profit. You should not write balance carried down.
Oh,
That you should write to appropriation profit transferred
oh yeah.
to appropriation profit transferred to A's capital to B's capital.
Yes, sir.
Done?
Yes, sir.
Okay. Now that is interest on capital. Interest on capital actually we can calculate. We know that how to make that interest on capital. Okay. So for making of interest on capital, two things will be there. That is also part of this. That also you should remember. Always remember that interest on capital we are calculating for the opening of the year, not the closing of that year. Okay. I'm giving a hint
Sir?
by showing in a board how to do that. Just a second. Okay. Say here that 1st April I'm having a capital rupees 5 lakh. Okay. Drawings 2 lakh. Okay. Now can you tell me closing capital how much should be?
3 lakh.
3 lakh rupees. How you have done that?
Opening capital minus drawing.
Okay. Opening capital minus drawings you have done. So now any one of the capital given to you, that is always closing capital. Remember that. So when that the partner's
Yes, sir.
capital account given to you, that is closing capital. Now, if any drawings are there, definitely that drawings already subtracted from the opening capital, then only that closing capital you got.
Yes, sir.
So now, if the question asking here interest on capital, concentrate properly this part. If the question
Yes,
is
sir.
asking interest on capital, there that if that interest on capital charging from 3 lakh, that is your loss. Correct or not?
Yeah.
Because of actually these drawings, it might have taken mid of the year somewhere.
Yes, sir.
So the firm have used your 5 lakh rupees from April 1 to example October 1, and that drawings you have taken in October 1. So October 1 your capital become 3 lakh. Correct or not?
Yes, sir. Yeah.
But before your capital, how much was there? 5 lakh. Got the point?
5 lakhs.
So at that
Yeah.
condition, when you interest on capital, you are calculating that interest on capital for 5 lakh. I am say example 10%. So 10% I am charging for 6 months. So 6 months it will be 6 by 12. Okay. How it will be? October 1 I told. That means April, May, June, July, August, September. October will not include because October 1. October month only is starting. So that
Yes, sir.
1, 2, 3, 4, 5, 6. 6 months. So 6 by 12. Next 6 month, that is 3 lakh interest on capital. Got the point?
Yes, sir.
So total interest on capital like that will be calculate for the 2 month, 2 year. Sorry, 6 months, 6 months for 1 year. You got the point? This point you understood? So that's
Yeah.
say same thing we are going to see here. Yes. Now, first thing is the interest on capital formula. We know very well how to do that formula. That's fine. But the thing is, when the calculation of opening capital, because interest on capital always we are calculating from the opening. So what I should do? Capital at the end, that is closing capital. I should add back the drawings, right? As well as any one of the losses loss has done. So additional capital introduced during the year, share of
Yeah.
credited, that also one of the part. So opening
Mm.
capital I am getting here. Okay. So interest on capital, that always calculating from the opening capital. But in mid, if
Yeah.
any capital changes, that also we should consider. Clear?
Yes, sir.
Write this formula first.
Which one the capital invested on?
Yes, yes, yes. Interest on capital as well, this formula. Positive characteristics are mine, yours, here, here, and quantifier that is you. Now coming to this point, my friend did not have any money, neither did I, neither did I. This is also different. So just to take a look at the sentence. So one achieved the first time. After that, student sometimes considered activities also. So every regular student, there are some new clothes, some they can be used or week off. But some of my friends are joining me for dinner, some off, not off. Okay. Now see that is our either neither both are used when the talking about two-person. So my friend did not have any money, neither did I. Okay? Just to try to remember what that determinant people now not much. Okay? The second one is determinant sometimes using and exactly some. Right? Some of and none of the okay?
Yes, sir.
Done.
Yes.
Okay. Next, interest on drawings. Interest on drawings. So simple interest method, many methods are there that we're going to see later, but simple interest method, interest on drawings equal to drawings amount, how much you have taken, into rate, into time in month, divided by 12, how many month you have taken. If month not given, that time 6 by 12 will consider. Okay. Say one
So what
example.
is rate?
Say one example.
Rate.
Rate will be the percentage.
Oh, okay.
Say example, 6,000 rupees drawings you have taken. Rate is 10%. So 10 by 100. Okay. And time, say example, October 1 have taken. So that time what will be? 6 by 12. So that's why 12 actually has multiplied with that only. Indirectly, the formula is like that. Is that fine?
Yes, sir.
Remember that if date not mentioned, this things is not shown here, but remember, date not mentioned. If date not mentioned, that time. If rate not mentioned, that time. Always this will take 6 by 12 only. Okay. 6 by 12 only.
Yes, sir.
Always month will take as a 6 by 12, and the rate will be as per the question, and amount also as per the question. Is that fine?
Okay.
Yes. And the next thing is that the product method. These all are the things I will explain next class. Okay. These things little
Okay.
more
Okay.
deeply needed. So that we'll see later. But product method we are going to see here. Interest on drawings
Yes.
equal to total product into rate 1. This 1, if you're not writing, that also fine. So the total product into rate divided by 100 into 12. Indirectly, that is 1 by 12. Okay. 1 by 12. We'll see how that actually this coming. When the question is coming, no, that time how this actually coming, that we're going to see. I think now only it will going to close.
Yes, sir.
6 minutes actually there, but this interest on drawings we will start tomorrow, that means next class.
Yes, sir.
Okay, remaining things before interest on drawings and product method, first one and product method have done this, remember that, and but how it is coming, that will explain tomorrow. Okay.
Yes.